It goes long and short, and it's quite beneficial. So it's maybe a trend follower.
So Bernhard, what are swaps in Forex?
They give us an interest rate for what we trade on our position. So whenever we go long or short, the bank gives us a carry, like an overnight rolling carry. It's also named like that. So if they have the settlement, especially let's say Dukascopy at 21 GMT or 22 o'clock GMT, summer or winter time, they make a rollover, and so you get for all the amount you were into a position, you get the interest rate for your traded currency, and that is on every currency pair especially, and some are higher and some are lower.
How can we find the highest swaps?
First, we can look at different currency pairs. Like here we have the US dollar, Turkish lira, and here you can see the swap on the very right side, long US dollar, short US dollar. It's for a specific amount. Here you can see long of your open position. Long, you have to pay a swap, minus 28.3 US dollar, but on short you get $22.84. So it's quite high, and this is one of the best currency pairs going short for getting swaps.
And here we have
US dollar, South African rand. It's a little bit lower. It's minus 20.24 if you go long in this pair, and you get 18.21 if you go short in this pair. And this is I would say, my favorite. It's the US dollar ruble. If you go long in this pair, you pay quite a lot, 31.42 US dollars, and you get 24.63 on the specific amount. I think it's 100,000 US dollar traded money, and it's quite beneficial if you just go short on this pair. So this is one of my favorites.
And how can I get the benefit from my trades?
Yeah, so let's say you have a strategy, it goes long and short, and it's quite beneficial. So it's maybe a trend follower. So the US dollar ruble depends on the most of political movements, and also on the oil price it depends, and on investors and buying, selling ruble. So you could follow the trend. And if the trend goes up, you won't go short, let's say. But if the price goes down, you go short and you stay overnight. And so you get the swap. That's how it works.
And can you give us some examples of the risks?
Yeah, the risk is, especially also in US dollar ruble, at the moment ruble is going up a lot, but the pair US dollar ruble is therefore going down because it's quoted in ruble. So you have to pay less ruble for the same amount of dollars. And it's not traded over the night. It's a specific currency pair that is not traded 24 hours. So there's a break after it's 20:45 to GMT to 7 GMT in the morning. And in between something can happen. There's like news events, or there's like interventions of central banks. We spoke about that in another interview. And so you have like a gap. And if you're short in the market and you expected a nice swap, you always get the swap, you get it 100%, but you might lose on your trade because it went up, for instance, but you wanted to go short down. So that's one of the risks. And so if you don't want this overnight risk, this gap risk, I recommend you to trade something that is traded 24 hours, like the US dollar, South African rand, or the US dollar, Turkish lira.
Thank you for joining us in our studios, Bernhard.
Thank you, Kais.
That wraps up today's broadcast, but don't forget you can get more of these programmes by clicking back to Dukascopy TV. Goodbye for now.